In today's podcast, I sit down to chat with my buddy and my guest, Jeff Kirdeikis, who is an influential and well-respected figure who's made many contributions in the blockchain and cryptocurrency space. So Jeff was the founder and CEO of a company called TrustSwap, where him and his established team, they established themselves as leading authorities in decentralized finance services, or DeFi, some people know that as. So he has secured over $1 billion across 10 different blockchains. And now, in his early 30s, having retired, he advocates for self-sovereignty and financial freedom. He has used this time also to become an author, and he wrote an amazing bestseller on Amazon called Building Wealth, Freedom of Time and Money. It's basically a simple, no bullshit book for anyone on the path of financial independence. I read it. It's awesome, simple. Link is just below in the description. And yeah, in today's episode, we discussed the three main pillars to consider when it comes to finance, wealth, and freedom. And that is time, inflation, and compounding. I hope you enjoy the discussion, and let's jump into it. Hello, brother.
Hey, good to be here.
Welcome to the, I don't even know what this podcast is called anymore because I stopped doing it for a while. But you're here because I wanted to chat with you.
I'm stoked to be here, man.
Yeah, today's guest, we got Jeff. I'm just learning how to pronounce the last name, Kirdeikis.
Yeah, we've only known each other 3 years, so it's about time.
Yeah, but I've never really pronounced it or thought about it,
yeah,
right?
That's fair enough.
Right, and I had it wrong in my mind.
Yeah.
So
it's like Hermione and Harry Potter. Everyone had a different pronunciation than when the movie came out.
Is that how it went?
That's definitely how it went. When I was like Hermione, everyone thought it was something different.
There you go.
Yeah.
So today, what I actually wanted to bring you on was to talk about, like, when I first thought about why I wanted to chat with you, I was kind of in my head thinking about just like what are some of the challenges in the world, and like the things that came to mind were money, inflation, and I was like, I should talk to Jeff about this. So we could probably jam on some stuff that would be useful and valuable for someone. So we just went up into the kitchen, chatted about what we want to talk about. We're going to talk today about time, inflation, and compound growth, and how those are all interrelated.
Yep.
And they mix together. This is unscripted. We're just going to see where we go with it.
Love it. Yeah.
Time, inflation, and growth, compound growth.
I think those are the three, for me, the most important things on how to like structure and plan to be able to live an effective and like methodical life in a way. Not like methodical in the sense that, 1, 2, 3, and there's no spontaneity, but being able to lay out a path through the woods of uncertainty. If you can understand and manage those three entities, then I feel like people are able to take control of their own life. Everyone knows like, time is money. Time is the most important thing. And we were talking earlier, like Warren Buffett says, time is the great equalizer. Like the greatest question that I heard was like, would you trade places with Warren Buffett right now?
No.
Right, because he's almost dead. Right? he's a multi-billionaire, like huge legacy. Everyone's going to say his name for hundreds of years.
Yeah.
But none of that really matters. What really matters is the time that we have left on Earth. And
Which we don't know how long that is.
Which is a crazy thought too.
Right? We operate under the assumption that we have time.
Yes.
So if you think of those three things, how would you order them? What just naturally comes to you when you order those three?
I think everything is in service to time. And then everything else, like, how does inflation work? And how can we get compound growth and money working for us so that we can maximize our enjoyment of time? That's the sweet spot. And then it really becomes a question of which throttle you want to use in terms of, I think of it as like a short-term versus a long-term throttle. We were talking earlier, like, a rock climber who lives in their van, they have their short-term throttle, in my opinion, like maxed out. They're like, yeah, like I have all the time in the world. This is great.
Yeah. We'll come back to that because I thought about that as we were in real time.
Yeah.
And I think it's an interesting one. Because it goes back to the contemplation. What is time?
Right.
Right. And depending on where you've come from, like in the yogic way, time is actually like they don't use time.
Right.
Or they're transcendent of time in the conceptual way that business and economics is structured, and most people think about time.
Right. Because like time is only the present, and the present is all you have, is what you're saying.
Basically, yeah. And they're also have a different paradigm around death and life and all these things. But maybe we'll clarify like time.
No, that's fair, honestly, and that's kind of like an interesting way to think about it as well. And I think that's probably more correct than what I led in with anyways, because when I was framing time, it's like, okay, you want time under these certain conditions. Like people go to work and they work, they're like, I need the promotion and I need to work harder because I want a new set of conditions. Like
you're working to get a new set of conditions under someone else's umbrella of rules. If you're a worker.
But right.
Yeah.
Or even like, it's not necessarily like, oh, it has to be under someone's rules if you're like an employee, because maybe you're an entrepreneur and you're trying to get a new set of conditions for yourself. And so you're just grinding it out.
Yeah.
And I think that is interesting.
It's
because
the buy back your time thing?
A little bit, yeah. But I guess the way that you're framing it makes it seem more to me like because you can just live in a van and go rock climbing and live like a really frugal life and love it, or live in
you have all the time in the world. Because where I was coming from I have a unique friend group, as in I have entrepreneurial friends and investor friends.
Yeah.
And we need to use that landscape of time in order to connect and associate and be on the same page with what we're talking about. Mm-hmm. When you think in investments, there's a clear way we relate to time.
Yes.
But then you think, when I go chat with like say climber friends that are really living that life, what's with all this trying to buy back your time? Just stop doing all of that and you've gotten all your time back by just not doing and getting involved with business or any of it.
Yes.
They look like they're always a step behind.
Yeah.
Like the richest, they're always a step behind.
Yeah. And I guess that's what I was talking like earlier, the short-term and the long-term lever, because yes, they have all the short-term presence time that they could possibly want.
Yeah.
What's it going to look like for them when they're 60, 70, 80?
If they make it to there.
Exactly.
Yeah.
I understand, presence, live in the moment, and I agree with that. And at the same time, which lever are you twisting? And if you're not twisting the long-term lever enough, I think, then you're potentially going to sacrifice your 70s and 80s. And how much is that worth? And I think that's a different answer for different people.
It's very much that. So weave in the other two. We got time, inflation, compound growth. And maybe we'll weave it in from a business perspective to start, or an economics perspective to start.
Well, I think at the foundation, money is stored energy.
Yeah.
And you go to work, you do these things, and then you store your energy in this thing called money.
Yeah.
And when you have inflation, the money buys less and less things over time. It's around 7.5% per year. So over 9 years, the amount of energy you've stored actually reduces by 50%.
Yeah.
So just by having your energy stored, within 9 years, you lose half of your energy. And that to me is crazy and insane. And on the other side, you have compound growth, whereas when you take that energy and you put it into assets, then those assets can grow at 10, 12, 14% per year. And now this ball of energy that you can then leverage to do various things is only growing.
Yeah.
So I think these are kind of like the two forces of how we can take our energy so that we can enjoy our time the most that we possibly can.
Yeah, and so there's this balance, right? Like, so you've got this inflation thing eating away the energy by making it less valuable, and you're dropping more resources into this thing, and if it doesn't overcome that, then the compound growth doesn't take action.
Yeah.
And then it eats away at your time, which is the most invaluable resource out of all of it.
Yeah.
That's the point of it.
Totally. And I think most people don't even have compound growth working for them. Most don't have investments. Most are living paycheck to paycheck, and most don't have a salary that's keeping up to the rate of inflation. Because if you're not earning 7% more per year, and you're not storing, and your net worth isn't growing 7% per year, your energy bubble is getting smaller and smaller, and your potential to be able to create an energy bubble is smaller.
Yeah, totally. So 7%, and why are you getting 7% exactly?
7% is, in my opinion, actually an underestimation of the true rate of inflation.
That's what I think too.
Yeah. I was just trying to be nice and give people hope.
I think we should be honest, actually.
That's fair.
Like, let's just, I mean, I also don't know for sure, but I think.
Right.
Yeah.
So there's a few metrics to go off the rate of inflation that I use, and I'm curious to hear what yours are. But one is, it's called the M2 money supply. So like the global growth of money supply. How much money are they printing on an annual basis?
Totally.
That's around 10% per year. And lo and behold, what a coincidence. The S&P 500 is going up around 10% per year as well.
Yeah.
And gold over the last 7 years has gone up, well, you guessed it, around 10% per year also. So everything is essentially tracking inflation, which is in one way super depressing for people who are like, I want to invest and get ahead in the world. But it's like, the tools that we're currently given are generally going to keep you at par, maybe put you a few percent
like
ahead.
your traditional vehicle.
Exactly. Like the S&P 500. Yeah. Once you add in dividends as well, now you're looking at 12% per year on average.
Yeah.
So yeah, you're getting ahead of inflation, which is nice. Gold, you're probably just going to be staying right alongside of inflation. And I'm curious to hear, are those the same metrics that you're looking at?
M2 is the number one that I look at too now. Yeah. I never really knew about it, but I started listening to a guy named Mark Moss, and he really goes on about macroeconomics and M2 specifically, the money supply, and how close these two correlate. They correlate.
Exactly.
They just correlate very, very well. And so you can just look at that, and it all makes a lot of logical sense once you look at it.
Yeah.
So it's worth mentioning too, if someone who's watching this right now, Jeff has a background in crypto and built a coin in that space, and so knows the Bitcoin game very well, which we'll touch on here, because it has a lot to do with vehicles, what vehicles can keep up with inflation. And you also know, like lately, it's been a while now, but I got into real estate again for the same reasons, is what are the vehicles that I understand that can keep up. And it's important to understand the vehicle.
Yes.
So it's like not just what vehicles are doing it, but what vehicles are doing it for a sizable term that's reliable, that we also understand. Mm-hmm. Because I do think a lot of people buy stuff they don't understand because someone told them to.
For sure.
So education is a massive part of it. And I think that's partially why I wanted to invite you over. It's an education thing.
Yeah.
And as I build my real estate business, it's like, I don't want people investing with me that have no education. So step one is education. Like, here's some resources before we make a deal. Mm-hmm. Teaching.
Yeah, for sure. And, because I feel like we have a lot of similar thoughts. And I think maybe one of our biggest differences is, like you said, you're very pro real estate, and I'm very pro Bitcoin, and I'm not against real estate.
I have both.
You're not against Bitcoin.
I have both.
Totally.
Yeah. I have Bitcoin.
Yeah.
I'm pro Bitcoin.
Yeah. And what are some of the reasons why you think owning physical real estate over something like a real estate investment trust, REIT, that you can buy on the stock market, what would be some of the benefits that you think there, and as well as
main one
Bitcoin?
Is upside, because I have more control to make the deals. So I started analyzing and buying REITs also about 10-12 years ago.
Yeah.
And I've done much better on my personal real estate than my REITs.
Interesting. And how do you think that's possible? Because in my mind, these REITs are managed by people who've been in the game for decades longer, and they're like the absolute experts, and they have huge diversified portfolios. So are you able to just strike it lucky? And because I know you're investing in various areas.
You're asking why I think that they don't crazily outperform?
Yeah. Why have you been able to outperform REITs, I guess is my question.
I'm not 100% sure, to be honest. A lot of REITs right now that I have owned historically, they're not actually profitable. So sometimes a lot of them get into positions when they get to scale where they end up actually being over leveraged, or they don't have cash flow anymore because for various reasons, their conditions change, and they're actually borrowing money to pay out their dividends.
Right.
So their debt's increasing and the book value stops.
Right.
So when in real estate, the main thing you're looking at is the book value. What's the equity of the property? Mm-hmm. Same when you analyze stocks. You're analyzing, we might be getting a bit too nuanced actually right now, but when you analyze something, an asset, you're looking for the equity growth of that asset. So it's whatever the thing is worth minus debt.
Yeah.
And a lot of these REITs that I used to be in, their book value in maybe 3 or 4 years ago just stopped growing. So they just stopped paying off the debt, basically. I think often to pay out cash to the investors, the dividends.
Their cash balances weren't increasing? Because I know, for example, Warren Buffett, he has more cash on hand than ever before.
Yes, and that's okay. Sometimes their cash balances are increasing, but at the end of the day, it's total assets minus total debt equals the equity of the property.
Right.
So they're amongst their whole portfolio,
including cash.
The equity is just staying the same. So some of those other numbers are changing, like current assets, cash assets, securities, long-term debt, short-term debt. But at the end of the day, the book value is not moving.
Yeah.
So the value per share is just staying the same. Whereas a conventional, if you buy something more simple, I'm not saying like I want to buy simple things, but like fully, but like I started with like the most simple thing. When I first started, it was the most simple thing, which is a one condo.
Yeah.
One room. And it's just as simple as it's cash flow positive on day one. Every year, the value of the property goes up a little bit with inflation. The rent goes up a little with inflation, and the debt goes a little bit down because you pay off the mortgage. Those are the three ways you make money in real estate. So at the end of the year, the equity of the property has grown, and I understand perfectly because there's only three variables.
Yeah.
So if you buy 3 units, it's the same one. So it is a little bit of an interesting thing with the bigger REITs. REITs are a great way to go, but I think there's more upside potential when you do it yourself. Kind of like, I'd say it's the same with buying stocks. You could be an entrepreneur and start a company from scratch and take it from $0 of worth to $1 million over 5 years. Or you could buy a stock that's an established company and just make 8% a year.
Right.
There's more upside if you start the business yourself than there is buying somebody else's, unless you're a master.
It almost seems like, to me, another metaphor that's I'm resonating with more is like, you can get the S&P 500, which I'd liken to a
at 12%.
At 12%. Or you can be like, okay, I know that Tesla or Nvidia or whatever stock is like going to crush because you've done
So
market
risk
research.
reward, perhaps.
Totally.
So my REITs, anyway, all it is for me is I looked at my REITs and I looked at my personal holdings and I way outperformed on my personal holdings. Same thing. I looked at my stock portfolio and I looked at my personal company that I started. My business outperformed all my stocks.
Yeah.
I made more growth and it's way easier. It's like I took the company revenue from 500K to 1 million revenue.
Yeah.
I increased the net profit by 50%. It's just easier because it's smaller.
Right.
So yeah, more risk though.
Totally. Yeah, that is an interesting game though to play because if you only double the revenue of X business, like how to make $1 million quick. There's all these videos online. It's like
quick,
make $1 million quick, buy $1 million business, grow it to $2 million and sell it.
100%. But I think they're all important. And I think that's I think Bitcoin is a super interesting play that I want to learn more about from you right now, actually.
Totally. Yeah. So the reason why I'm so stoked on Bitcoin is because like a lot of people, and myself included, see it as digital real estate with none of the downsides. You know what I mean?
Yeah.
There's no tenants. There's no hot water tank. There's no property taxes. There's no insurance.
Yeah.
It's not locally vulnerable to hurricanes, earthquakes, industries leaving the city.
Nothing,
like in Detroit. Oh, the automotive industry has crashed. Everything in Detroit is worthless. Or it's not politically exposed, like, oh no, it's gone to this political party and now the state is a shithole or whatever. So I love that. So
I'll just comment then, and I want to hear your response, because the very thing you just said is the reason why people don't believe it's anything. It's not susceptible to climate change or political or tenants or anything because it's nothing.
Okay.
So it's not affected by anything because it's not anything to begin with.
Right.
That's the argument that I've heard from, and I own Bitcoin, so
Yeah.
I'm pro the thesis that it's got a future.
No,
but that's an interesting one. They just say, yeah, of course it's not susceptible to any risk because it doesn't really exist. It's not anything.
And then I'd ask, what risk is gold susceptible to?
I don't know. What would a gold bug say?
Well, it would be an anti-gold bug that would be trying to tear down gold. So to try to straw man gold.
An anti-gold guy? What would he say?
I don't know how like risks on gold. Well, obviously gold has historically been confiscated from Americans. I think it was in the in the 1900s for sure. Within the last 100 years, they're like, we are taking all the gold away from the Americans. And they went boom, boom, boom. And if you're holding gold, you're getting huge penalties. You're getting put in jail. So the risk on gold was that it was seized because it's physically there. And Michael Saylor talks about Bitcoin as the only asset that like can't be stolen from you by force. Because if somebody comes to your house and you have diamonds or you have gold or you have whatever, they can kill you and then they can steal your stuff.
Yeah.
With Bitcoin, if they kill you, they're not getting your Bitcoin.
They still don't have it. Yeah.
They still don't have it. And so government seizures on Bitcoin are so infinitely more difficult because let's say the Canadian government is like, all right, Canadians, we're taking all your Bitcoin. I'm going to get on a plane and I'm going to go over to Tahiti or wherever I'm going to go. I got the 24 words memorized for my seed phrase and boom, there I am in Tahiti. I didn't have to swallow gold and then put it out the other end to try to smuggle my net worth across the border, right? You don't have to use cash. It's
fully portable.
You are, and this is another thing that I'm super passionate about, time and sovereignty. And sovereignty and freedom. And with Bitcoin, I feel like as an individual, you have ultimate sovereignty because nobody can have rule and domain over you when you have rule and domain over your stored energy.
And that energy is outpacing inflation. Coming back to like our trio here.
Totally.
So it's like the issue is like none of that matters if you're just waiting around in your sovereignty as it just dissolves away.
Very true. Yeah.
So that's the thing.
And there's a lot of cryptocurrencies that people can say, oh, well, you're sovereign if you hold Ripple or you're sovereign if you hold Solana.
Do they say that?
No. But, but just like, again, to play devil's advocates, because it's like, oh, you can bring it wherever you want. It's your own keys, your own coins.
Yeah.
But the issue is there's no fixed supply and people have pre-bought an ICO.
How come no one else is doing the fixed supply thing? If everyone's like super bought into the fixed supply, why are all these other coins not doing it?
I mean, there are fixed supply coins and there's coins that are even deflationary. So like there are coins that are more scarce than Bitcoin. Like you can take Bitcoin code and like fork it and alter it. And like Bitcoin Cash is a fork of Bitcoin. Bitcoin Satoshi Vision is a fork of Bitcoin. And at a certain point, though, it is network effect. So unlike gold, this is
this is like clarify for anyone the network. It's like the Facebook thing, like the network effect.
Right, exactly.
So clarify for people that might not know.
Totally. So if I'm gonna create a new Facebook today and I clone Facebook 1-to-1,
identical. Yeah.
Nobody's gonna use it because nobody's on it.
Everyone would have to transition over.
Exactly.
Literally, even if it's as simple as literally just creating a new login. Why do it? I already have that.
Yeah. Back in the day, I had made a social media website that actually paid people to post. And it was like freedom of speech. That was the whole foundation. It was called Uptrend. It was another
That's a good name.
thing. Yeah, it was super cool. But again, even though people were getting paid to post, no one wanted to do it. They're like, oh, it's a lot of hassle. Like, it
becomes work.
Yeah. And I'm like, hey, listen, just upload your video, not only to YouTube, upload it to Uptrend. You're going to make like $50 every time you upload, at least when you start out. And they'd say, oh, it's just, I can't be bothered. It's too much work. I'm like, network effect is real, you know?
Right.
So,
Huh. Yes, it is.
Yeah. And to that, you know.
So Bitcoin's reached that critical point that it's to overtake it at this point is like almost impossible.
And as I mentioned, there's Bitcoin Cash and Bitcoin Satoshi Vision, which let's call them people who aren't in the Bitcoin ecosystem, have like very negligible changes to the Bitcoin code. And they're just a drop in the bucket in terms of network effect, in terms of the real actual Bitcoin.
Yeah.
And no one is going to be overthrowing Bitcoin at this point. As of yesterday, as we were talking earlier, the U.S. now has a strategic Bitcoin reserve. You have BlackRock that has tens of billions of dollars.
Are they the biggest holder?
I think it's either the U.S. government or MicroStrategy.
No, I think BlackRock's bigger than
BlackRock. It is? Okay, there we go.
Yeah. I think so, yeah.
Yeah, well, at least they're not it's not like it's their Bitcoin, though, per se, right? Like, obviously, it's
the fund, and yeah.
Mm-hmm. So the amount of momentum behind Bitcoin, it's unstoppable at this point.
Yeah, what's that gold guy that's really
Peter
Schiff? Yeah. Well, why when those things are acknowledged, like the network effect, why do guys like him continue to be like so against it? Do you think? Well, is it just because he's predicting his interest as gold guy because he owns a gold fund? He ultimately has to take that position for his shareholders.
I don't know if it's like a little bit of that, but I think the majority of it is because he's become such a vocal anti-Bitcoin guy. He gets so much engagement on Twitter for it that it's like, it's his shtick now. Like he's like, oh, Bitcoin sucks. And then everyone's like, oh, Peter. Now he has like 1 million followers for just being like,
so he's built a following off of it.
Exactly. Yeah. And there's other people who have also built followings off being anti-Bitcoin just because like, people have to reply because it's so easy to deconstruct their arguments. But even Peter Schiff, when the Bitcoin reserve happened yesterday, I forget exactly the wording, but he's like, I'm glad it's only Bitcoin and not the other altcoins. Yeah. So even though he poses as an anti-Bitcoin guy, he's been on lots of debates, and there is common ground between him and Bitcoiners. Like both sides are looking for, because Peter Schiff is a gold guy, as we're saying, are looking for a good way to store value over time. And that's
this is back to what we're talking about here. Why do all this? Why store all this value over time? And what is freedom in the first place? Because you're trying to get your time back.
Yeah.
So I think it's like, I know people, and including myself, that can get lost in the thing. And especially when you stop enjoying your journey because you're so busy trying to get your time back. So much of what I've learned as I've gotten older and as being an entrepreneur as well is like, am I actually enjoying the process of buying my time back? Because the actual best way to buy back your time is to enjoy what you're doing. Right. Now I'm getting my time back because I'm happy and present with what I'm doing. And I'm an advocate for being a creator, right? Like an entrepreneur is nothing more than, I'd say it's synonymous with creator. And even in spirituality, it's creation. Everything's creation, like being present with creating things. And when we lose sight of that journey, we get lost in like trying to buy back our time.
Right.
So I don't actually like the idea so much even of like trying, but you hear that term so much when you listen online. Well, I know with the stuff I listen to online, a lot of the entrepreneurs, they're always trying to buy back their time, set up SOPs. You got to get your time back. You got to get out of it. As soon as you get into that, you got to try and get out of that to get to a higher impact activity.
Yeah.
But it's like the real question is, are you enjoying every step of the journey? And then you automatically have your time back because you love what you do.
Yeah. And maybe I think of it less as buying back time and more as leveraging time. Because when you're a worker, you have a ceiling. I can only make $35 an hour. I can only make $200 an hour as a lawyer or whatever. As an entrepreneur or as someone who's invested in assets, there is no ceiling.
No, there isn't. Yeah, I agree. I was looking at I was really doing some reflection work recently, and it was funny because like it's so much work building a business. And then I was like looking at what actually has made me wealth over time. And it's like the things that I did nothing, like real estate or Bitcoin. You buy it and you do nothing. Yeah. And it's actually the thing making all the wealth while I'm toiling away doing all this work. Yeah. And it's like, man, if you just started early and get involved early in your life. And that's why I think coming back to compound growth, which was one of our 3 pillars, the best financial advice you could probably get is to start it early in your life. Yeah. Right? Because that's that third lever, compound interest, time, and those together overcoming the inflation. But a lot of people don't start that early. Yeah. Like I remember when I was, I'll use my little brother as an example, but like a lot of people don't get started on their investment journey because they don't identify as an investor. They're like, I don't have enough money to start. Right. And one of my best pieces of advice for people is like literally start with like $20 a month into something, anything you choose. Yeah. Just so your identity shifts into being an investor. If you ever ask someone, are you an investor? And they say, oh, I'm not an investor. But if somebody starts putting $20 aside for 6 months, they'll be like, yeah, I guess I am an investor. I'm an investor. Yeah. And it's that actual shift in identity that has to happen early in your life. Yeah. So it's like teaching young people like that it's cool, really.
And I think the issue
it's cool.
It is. People think linearly and they don't think how compound growth works exponentially.
I don't think our minds work that way.
You almost have to see it physically on a chart to be able to grasp it. Like $600 compounded over $600 a month for 30 years.
It's a lot, yeah.
At 10% interest rate, which is the S&P 500. So you're putting $600 a month for 30 years. That's like, well, that's reasonable. It's probably a little bit of a stretch for most, but you can do it. It's $8 million. It's like, that's an insane amount of money.
That anyone could do that.
And anyone, yeah, I understand. Most people, yeah.
That's reasonable. To put it that way, it's reasonable.
Yeah, or you could scale it down. You know what I mean? If you go to 550, it's not going to be like $2. You're going to be still in the ballpark of phenomenal retirement money.
Yeah.
And the thing is most of that growth happens at the tail end, the last 5 years.
Yeah.
So that's where compound growth does get interesting and people get impatient. And I think that's why a lot of people...
I have a chart. I'm going to actually attach it to this podcast in the section.
Yeah.
And it's like an Excel file. I'm going to attach it in there as a free giveaway.
Yeah.
But and you can plug in your age and your stuff, and it's like, but it's cool because it shows you that.
Oh, I see what you're saying. Yeah,
like it's an actual Excel dial, and you can see how much you put in each year.
Right.
I do it by the year, and you start at age 19 till age 80 or whatever you choose, and then it shows you it, and it's like, whoa.
That's motivating for me. When I see those kinds of numbers, I'm like, oh.
Okay, I'm gonna put it in.
Put a little more. I'm
gonna attach it to this podcast. It's fun.
And if not even like,
I'm gonna use your numbers too. 600 starting at 19.
Yeah.
Okay.
My math should be correct. I'm 99%.
We'll see what it comes out to. Yeah.
Might be 12% again because it was with the S&P dividends reinvested. So let me renote that 12%.
I'll plug in the interest rate I'll plug in the rate that gets it to the 8 mil.
Yeah, it should be 12. If I'm not, you can come knocking.
Yeah, cool.
Actually, just a real quick note too is how small percentages make such a big difference, because actually the difference I remember now between 12% and 10%,
it's a lot.
was $3 million. So if it's 10%, you're getting 5. If it's 12, you're getting 8. Which then most people are like, okay, I'm going to invest. Like, let me get a mutual fund and let me like go to a financial advisor, and they'll skim 1 to 2% off you every year, which is the difference of $3 million.
Right.
And $3 million on 8 mil, that's basically half. So because you get a mutual fund, you're losing approximately half of your wealth.
Yeah. And I remember like when you wrote a book on this.
Yeah.
I can put a link to your Amazon too on
Sure.
that book, because I actually read it.
Yeah.
And I thought it was really good, simple for someone to just get started. And you basically broke it down to like, keep it simple, save on the fees, buy the S&P 500 and buy Bitcoin.
Yep.
And is that correct? That's basically it?
S&P 500 is like diversified in the United States, obviously.
Yeah.
And I also suggest VT, which is Vanguard Total World Stock, to be globally
Okay, so they got these three things, and then I don't remember the split. Was it 1/3, 1/3, 1/3, or was it?
Well, I also said like bonds, just to kind of cover my ass. I don't really believe in bonds that much, but it's good information for people to have who are on a more conservative side. And so in the book, I just
would you do more than 50% for the Bitcoin section?
It all depends on
risk,
on the person, and then risk and time frame and where they're at in life. Like if someone's 70 years old, I'm not going to say, oh yeah, Bitcoin, let's go.
Yeah.
But I know a lot of my friends who are like, I really want to get ahead. There is a stock MicroStrategy, which is basically like 2x leveraged Bitcoin. And I'm like, buy MicroStrategy, like dump it all in. Like do not just move it all there. That's where my entire TFSA, my entire RRSP, it's 100%.
That's what you're doing.
It's 100% MicroStrategy.
Okay.
Yeah, because it's, again, I'm way oversimplifying, but it's essentially a 2x leveraged Bitcoin play.
Right.
So, yeah. I like Bitcoin, and it's going to go up on average.
And how does he do that? How does he accomplish this leverage?
So smart. So the question is, if you could get a loan for 0% interest for 10 years, but you had to buy Bitcoin, would you take it?
Yes.
Yeah.
I mean,
0%. As long as Bitcoin at the end of 10 years is higher than the price it is today, and the odds are
0%.
0%.
Is that what he's getting?
That's what he's getting.
How is he getting that?
Because he can. And this is getting more into the weeds now, but they're called convertible bonds, so they can convert it for stock prices.
Okay.
So if his stock is trading at 300, they'll actually put a premium. They're like, okay, we're gonna do this convertible bond, 0% interest, and the strike price is 450. So they can't even like make a profit until it passes 450. So he's arbitraging so much
on behalf of his investors.
On behalf of his investors. So like he's getting the greatest deals in the world because certain companies have mandates like we have to buy bonds. They can't buy stocks. It's just like in the rules from their shareholders.
That's the
whatever.
policy. Yeah.
So as an individual, I can't get 0% interest with a 50% premium. He can. because he's issuing
And
bonds.
that's why you give the money to him.
Exactly, because I'm essentially getting the exact same upside as
It's
Michael
his
Saylor.
unique selling proposition, let's call it.
Exactly.
Okay. Yeah. So, yeah, I knew the basics of that, but it's cool to hear you explain it.
And that's really oversimplified, and there's more to it, but
Look it up, MicroStrategy.
if you're 19 years old and you want to go for the Grand Slam, take a look.
So I think it's important for a listener to know that you actually became a multi-millionaire from the crypto space, and you're not just some guy sitting here and we're just riffing on stuff. I have not become a multi-millionaire from the crypto space, and I am not a multi-millionaire. I've recently surpassed $1 million, and it was from real estate investing, which is why I'm like, I understand how this one works. But I also know guys like you who have done insanely well in that space, and it's not as, it takes complexity and the ability to think to do well in it. So you're not just riffing here saying MicroStrategy and all these things. You actually know what you're talking about, and you've actually built your wealth in that space. So where were we going to go? Oh, I was going to tell you that, like, I guess my thesis of Bitcoin in general, and I wanted to see if this aligned with you, but my thesis in the most simplistic language is that I have a position in real estate based on the essence that I believe fiat currency is going to probably go away in the way that we know it in my lifetime. It's going to get inflated away and not be useful in the future. When that happens, I don't know. And there's a gap for what is money. And that's a big contemplation people have to think about in general. What is value? What is money? And I think Bitcoin is going to take a role as being one of the main sectors. And if that's the case, which I think it already is, there's an insane upside in front of it.
Yeah, there's so many examples in history and even in current day of countries and civilizations having their currency collapse into valueless paper or valueless coins that have been clipped in the Roman days.
Yeah.
And do I think that like fiat is going to go away? Maybe, maybe not. I won't even say that I'll take a position on that. But what I do know for
Well, it's
sure,
more like the dollar. There'll be another fiat, but it was like, I think,
right? If it's a CBDC or who knows,
Yeah.
hopefully not that. But at the end of the day, everyone says, "Oh, I'm afraid of Bitcoin's volatility because it goes up and down." And the joke there is, well, fiat, US dollars, Canadian dollars,
just goes.
they only go down, and that's the only direction it will ever go for the rest of time. And so how fast...
That's hilarious. I've never heard that.
Yeah. So how fast it goes down, that's the only variable. Like right after COVID, they printed 40% of all dollars ever produced in circulation were printed in, what was it, 2 years? So when you think about with the U.S. history, like 250 years, I don't even know how long the U.S. has been around, something like that. And then within 2 or 3 years, they printed 40% of all dollars. So it's like the value of all dollars just got destroyed. And so, yeah, we need things that are strong stores of value. And so, like, I am a big fan of gold. I don't have a gold position because I think it's inferior to Bitcoin.
Of course.
Yeah. But, yeah, I'm a huge advocate for, as I mentioned, just figuring out effective ways to store energy. And Bitcoin
You have to do something.
Is the most effective way, in my opinion, because you're also not relying on CEOs of companies managing the companies within the S&P 500. You're not taking gambles on companies. You're not gambling on U.S. bonds performing well because of economic macro this, macro that. All you're gambling on is that the U.S. dollar is going to go down, and
But that's not a gamble. That's a certainty.
Exactly, and therefore the price of Bitcoin goes up, assuming just net zero adoption. If there's no more buys, no more sells, Bitcoin will go up at 7 to 10%.
Just in relativity.
Exactly.
So what if you take the opposite position of any kind, like what is the risk if there is one?
The biggest risk with Bitcoin, in my opinion, is the person who's holding it. And if they have a long-term or a short-term mindset. Because if they have a short-term mindset, there's such crazy volatility. We saw it in the COVID crash in March. We saw it recently too. There's huge dips, and people just are humans and they get scared. So I think that's the biggest risk, is the people aren't educated and on why they bought Bitcoin. Like, oh, I'm just going to try to swing it for make $1 million real quick. Like, that's dangerous. and they don't have the right mindset or time frame.
That was not what I was expecting you to say.
Yeah, I mean,
but I think that makes a lot of sense.
The classic answer that I think most people would say is like, oh, like, well, what would your answers be, I guess, to the risks?
Risk?
Yeah.
Again, I'm not sure anymore. Like that's why I used to not like it at all.
Right.
But now that I understand like the network effect, I think it's past that point. So like the biggest thing would be that it's not adopted.
Right.
But it already is adopted by too big of a. So what would I say against it? I mean, this is not specific to Bitcoin, but what I'd say is it doesn't really have a main. It's not. What do you do with it?
Right.
Like it has no real use case that's significant yet because it's not being used as money and it's not doing anything. And I've never done anything with it.
Right.
And so like, I'm not saying real estate's better than Bitcoin because I would say that Bitcoin has outperformed in the last decade. But at least when I rent houses and I know my tenants by name, a lot of them, right? So like there's a service happening and like there's something being done while I'm getting wealthy and providing a service.
Totally.
Whereas my Bitcoin, I haven't helped anyone with my Bitcoin.
Yeah. I mean, so on two fronts,
Yet.
Yeah, right. So,
but it could be money in the future. I don't know.
On the use side, I think one of the biggest uses is stopping the funding of potential war and corruption. That's
a very good,
because as we have this fiat currency, and this is maybe a little bit of a side tangent, but fiat currency is what funds wars and all of this government misspending and a $34 trillion debt in the United States.
Yeah.
Because they can just print more and more and more. There's no cap. If in theory there was a cap with Bitcoin, if the US was like, yeah, we're going to now be backed by Bitcoin, this is theoretical. You can't fund wars. You can't create new turmoil globally unless you're either raising taxes or increasing revenue. And a lot of times in history, either you're going to inflate or you're just going to stop fighting. So that's really cool. But back to the real estate analogy, on the financial side is, would you, and this is a Michael Saylor MicroStrategy analogy. He says, would you buy beachfront property in Miami or Manhattan real estate in the 1900s with the only rule that you could not do anything with it? You know what I mean?
You're not allowed to do anything with it.
You can just hold it as a piece of land. It's a piece of land.
Which one would you buy?
Or would you buy either is the question.
If you can't do it.
If you can't do anything. And the answer is, well, of course you would buy it because it's going to go up an insane amount of money from the 1900s to today. It's a desirable asset.
Except Bitcoin doesn't have a holding cost.
Exactly.
Right. So you buy when I thought about like buy a piece of real estate on the beach and do nothing for 100 years.
Right.
I'm like, oh, well then I'd have all this like these expenses every year and it'd just be costing me money. It would be a money hole.
Yeah.
But Bitcoin transcends that in the sense that there is no holding cost.
Yes.
You just buy it and then you're done.
Yeah.
While you watch the certainty of the dollar go down.
Yes.
Because it doesn't go up and down.
Only goes down.
It just goes down.
Yeah.
I think that's a good place to end this.
Sounds good. Yeah, I think to wrap it all up, like we were talking earlier, as long as people have an understanding that the sooner they get in to invest in any asset, like another great
just
quote,
become an investor.
Yeah, you spend 40,000 hours working for your money over a lifetime, so it makes sense to spend a few hours learning how to leverage that. And to me, that's the most important thing is like, just spend a little time to like dig deeper into, okay, well, yeah, what is it, if for everyone who isn't sure, like what is an index fund? And okay, I have some concerns about Bitcoin, talk to ChatGPT about it or whatever it may be. And I think that's the most important thing and reason why there's so much poverty. I really think it really is just a lack of education. It's not it's no longer.
It is that's a whole other podcast, to be honest, like education.
Yeah. And there's no...
And you don't have to know everything. You need to know a couple things. You don't have to be an expert at every investment.
And now with ChatGPT or Grok or whatever it is, the access to this information is so easy. Because before it was like, oh, you have to Google it and da-da-da. It's kind of like Googling's sort of difficult. But now you can just talk to it and have a conversation. You're like, I don't understand this. Can you tell me more about that? And I've been having phenomenal educational experiences with ChatGPT and Grok. And so I just suggest everyone else to do the same. Yeah.
Just talk to it.
Just talk to it. Yeah.
It's like a perfect therapist.
Yeah, it is.
Dude, thank you for coming out here.
That's been fun.
Chatting with me, buddy.
Nice.
Yeah.
Enjoyed it.
Can I give you a hug?
Yeah, man. Of course.
Until next time. Hey, thanks for watching this podcast episode. I really enjoyed jamming on this one with Jeff. And as I mentioned in our chat, you can find Jeff's book in the link below on Amazon. And it's a great read for anyone who wants to deepen their financial education. I'll see you next time.